Vancouver-based entrepreneur who's active in the development of new high-technology ventures. Professional engineer, he started his own company, Volker Limited, in 1973. He sold it in 1981 and decided to work with entrepreneurs in building new companies. Since then, he's been active in various early-stage businesses as a founder, investor, director, and officer. He's presently the director of Simon Fraser University's Innovation Office and president and chairman of GreenAngel Energy Corporation, a public company that invests in green technologies. He's also founder and president of the Western University's Technology Innovation Fund, an angel fund for startups. He co-founded the Vancouver Angel Network, Greentech, and is also quite active with New Ventures BC, which is an annual business competition. He was chairman of the Vancouver Enterprise Forum for several years and is very active on the BC high-tech scene, serving on non-profit boards of New Ventures BC and the Canadian Listed Companies Association and several public and private company boards. He also frequently writes and speaks on management and technology issues and is active as a member of various charitable and educational boards. We've got some background noise going on, Bruce. Can you apply your magic touch? So, we're ready to roll. Over to you, Mike. The floor is yours.
Okay, thank you very much, Guy. Can you hear me okay?
Yes, you're coming through just fine.
Okay, excellent.
Well, this is background noises.
Okay, well, thank you for that kind introduction, and thanks to everyone who's joining on this webinar. I must say this is my first experience of doing a webinar, so I'm kind of enjoying it and learning it as we go. Usually I give these talks in front of audiences of entrepreneurs looking for capital, so that's also a little bit of a change, but that'll be mostly what I'm going to be talking about today, is all about raising capital for young companies, and in particular companies interested in doing something in the green technology sector. So I've been doing, as you mentioned, angel investing for many, many years, and you can see from this photograph that one of the things I've learned about angel investing is it's pretty easy to get into trouble, i.e. to get into companies, to make investments. All you need to do is write a check, but then the big challenge is getting out, and that is one of the current challenges that angel investors have, and it's one of the challenges that we have to address if we want to see more and more private investors get into companies. It's going to be one of the big challenges with crowdfunding that I'll be talking about briefly a little bit later on. This slide, actually, in case you're wondering why I am in jail, this is actually the Vancouver City Jail. The Vancouver police station is undergoing a transformation. It is going to become a technology innovation center, and I was touring it recently with some of my colleagues to see what could be done with it. I made the bold suggestion that we leave the jail as it is rather than remove it, just in case any entrepreneurs give us any difficulty and don't give us a return on our investment. We can put them in there until they start to perform. So that's the story behind that little slide. Now here's my very simple view of the world, and forgive my feeble attempt here at computer graphics. Oh, I see that's flipped in the wrong direction.
Let's go back to that one. That was good.
I'll just go back here. I'm going in the wrong direction. Apologies. Like I say, it's my first attempt here. Yes, so here's my feeble attempt at computer arts. It shows, if it stays long enough, it'll show that ideas are basically the brainchilds of entrepreneurs who then take those ideas to market. In my humble opinion, entrepreneurs are the champions of innovation, and it's our job as investors to support them in getting their ideas to market. Some of the barriers in doing this, in supporting entrepreneurs and helping them growing their business, there are some regulatory issues that we're confronted with. When you're building a business, it always comes down to good people and people that have a little bit of funding in order to realize their ambitions and dreams. On the people side, a challenge that many jurisdictions are having and many companies are having is attracting good, talented people to these companies. And that's really what it takes to grow a business. Companies are all about teams of people doing good and interesting things. In terms of bringing people on board, once you've founded a company, it's not always easy to bring new people in as partners. When you give them shares, for example, there are tax issues, and these are impediments to attracting people. There's also geographical issues and global issues around immigration. And this is certainly a fairly hot topic here in Canada, attracting people from other jurisdictions, especially bringing back people that have left and getting them to work in our high-tech industries. On the money side, I believe there is way too much emphasis on investor protection. Various regulators, securities regulators, attempt to protect investors. They attempt to protect the general public from getting tricked and scammed by unscrupulous promoters and dishonest individuals. And unfortunately, because of that, they've put a lot of emphasis on protecting investors to the detriment of entrepreneurs who are finding it more and more difficult to raise the capital that they need to grow their companies. So let's talk a little bit about access to equity capital. And we're talking, when I say equity, we mean shares, selling an interest in the business. Typically, there are many sources of capital, and you can see on my slide here I've bolded in yellow that there are many sources other than equity. And I've actually got a website called moneylinks.ca which will give you a flavor of some of these sources. We've got a lot of government help. We've got traditional institutions, and of course we have private individuals and institutions that assist entrepreneurs. When a company gets launched, the entrepreneur will typically approach family, friends, and relatives. That only goes so far. Often, they then start looking for venture capital, but certainly in most recent years, many entrepreneurs are not going to venture capitalists right at the beginning. They come in a little bit later, because typically venture capitalists are looking for more mature, less risky businesses that already have customers and cash flow. One option for entrepreneurs is to go public, and in fact I think this is what crowdfunding is going to turn into. But certainly here in the Vancouver area we had a lot of small resource companies, mining and exploration companies, raise their risk capital by selling to the general public, basically selling to speculators. And that was a very active undertaking, and of course Vancouver got a reputation, both positive and negative, for being the place where you can speculate and raise that kind of capital. Because of the regulations and the emphasis on investor protection, those markets have been more difficult to access, while we still see a lot of resource companies using the junior public markets. It's very rare for technology companies to go that route. It's expensive and it takes a long time. So we're not seeing too many take advantage of the junior public markets. Crowdfunding is very, very popular as a topic these days. You read about it in the media quite a bit here in Vancouver. On Thursday of this week, we've got an all-day workshop on crowdfunding. There's some good things about it. There's some negative things about it. I tend to think it could be the new public market, the new junior public market, that's going to do what the Vancouver Stock Exchange did many years ago for the exploration companies. And then, of course, there's your angel investor, and that's my specialty and what I want to talk about mostly during this session. The problem with angels is that there aren't enough of them. By definition, they account for fewer than 1% of the population. So let's talk a little bit about just what I mean when I talk about an angel investor. The term originally came from Broadway. It was about accomplished stars and actors, performers, helping up-and-coming performers, coaching them a little bit, giving them some shelter and some guidance and so on. Silicon Valley took the term and applied it to experienced and successful business entrepreneurs who are now in a position to invest not only some cash but also time into new startup companies. There's also a technical definition for angel investor, and these terms are often synonymous. In order to invest in a company, you have to meet certain exemptions according to the securities regulations, and one of those is that of an accredited investor, and that basically means that you are a wealthy individual as measured either by your monthly income or your annual income, which in Canada and the US has to be a minimum of $200,000 per year, or you just happen to be sitting on a pile of cash that you can speculate with, and that pile of cash has to be at least $1 million. And you can't include in that your principal residence. If you did that here in Vancouver, probably everyone would meet the qualification. So it's basically wealthy individuals, and as I mentioned, that's about 1% of the entire population. And one interesting thing about angel investors is that they invest their own capital. Their decision processes are very diverse. They're also very simple and straightforward. Because angels aren't investing other people's money, they don't have to be particularly accountable, and they can make decisions very, very quickly. They can go by gut feeling. They don't have to justify their investment decision to anyone other than perhaps their partner or spouse. Angels also are very active in coaching and mentoring the companies and helping them grow through their network of connections. I just want to show you this slide, and it's the reason why angel investing is popular. In addition to accomplished entrepreneurs putting something back into the community, the returns on angel investments is actually pretty good. A study done by Rob Wiltbank of Willamette University in Oregon showed that on average, from a very, very large sample, the returns were 27%. The study also showed, as indicated by the blue bar on the left, the failure rates were quite high. That bar tells us that more than half of the companies failed early on and produced marginal or no returns to the investors. On the other hand, the tiny little bar on the very right, the blue bar, shows that fewer than 4% of the investments produce those huge returns that we just dream of, the 30 times returns. And you can see the I guess it's an orangey green bar there on the right, gives you the dollar amounts of those returns as well. So this is what is attracting more people to the angel investing business, the idea of getting these kinds of returns. What Wiltbank also found was that out of all of the angel investors that he surveyed, and there were over 1,000 in his survey, he found that about 40% lost all of their capital. That's very discouraging, because you certainly don't want to be in that 40% if you're an angel investor. He also found that to be successful and to get those 27% type returns, you had to be in a very large number of investments, certainly well over 10, and you had to do extensive research and due diligence before getting into the investments, And then after making the investment, you would have to spend considerable time nurturing and coaching those entrepreneurs along. So there's a little bit of background and some of the academic research on angel returns. Angel networks are now everywhere. Last year I spent time in several other countries, India, Australia, Africa, and there are angel networks cropping up all over the place. So there's certainly no shortage of them. I think it's a global movement. Here in Vancouver alone, there are several angel venues, different formats, different styles, but there certainly is no shortage of interest. One of the things that I've been personally very active in is the creation of angel funds. Going back to that slide that showed you the returns, I mentioned that you had to be in a large number of investments. Now, unless you're a very active angel investor with at least $1 million to invest, where you put in, say, $50,000 to $100,000 in more than 10 companies, your other alternative is to invest in a fund along with other angel investors. That way you address all of the success factors that Rob Wiltbank was referring to in his study, i.e. you get into a large number of opportunities, you work together on checking out those opportunities, and then you help them along afterwards. So the first fund I started was the Western Universities Technology Innovation Fund about 10 years ago. It started as a VCC, which here in British Columbia means that you get tax credits from the provincial government as an incentive to do things like this. In our particular fund, we've made it open to any technology company, any types of technology, Greentech, IT, life sciences, medical devices, anything that has some proprietary intellectual property behind it. To date, we've made over...
Mike, Bruce McKenzie here. Can you just clarify what you mean by VCC?
VCC is short for Venture Capital Corporation, and it was a term coined by the provincial government in British Columbia, and if you qualify, i.e. if you are approved by the BC government as a VCC, then you can offer tax credits to investors in your VCC. So we've got, to date, in the last 10 years, we've made over 60 investments, roughly $100,000 on average per investment, per company. There are well over 100 investors in the fund, and as I mentioned, these investors get 30% refundable tax credits, which means that even if you don't owe any taxes or have no tax payable, you get a check back from the government when you file your tax return. You can also take your shares, interestingly enough, and put them into a retirement savings account, which gives you an additional 44% tax break, giving you very, very good leverage. And to make it even more interesting, if you leave your money in long enough, you can do this more than once. And our very early investors, people who came into this fund in 2003 and 4, have already gotten 100% of their capital back just in tax breaks alone, but they still have more than 100% of value because the investment in What If has actually increased and is greater than the original purchase price, even though we've had our number of failures and write-offs along the way. The winners are really carrying the day, and it's so far so good. Now, of particular interest to this audience might be the GreenAngel Energy Fund. The problem with the fund, the previous one, I'll put it back up here with What If, is What If is basically structured as a private company, and investors in this fund have to meet those securities standards. That is, you have to be accredited or you have to be a millionaire. So no sooner did we get What If started, and I got many calls and inquiries from people who were not accredited. These are people like teachers, doctors, dentists, professionals who were not yet millionaires, who were earning decent wages, typically $100,000, $150,000 a year, but not that magic threshold of $200,000. And whenever they called me and they said, gee, we'd like to be an angel investor and participate with you in this fund and learn all about angel investing and so on and so forth, I had to say, sorry, but we can't let you into this fund because of the securities regulations. So to address that, we went public. We listed this particular fund, GreenAngel Energy, on the Toronto Venture Exchange, which means that anyone, anywhere, can buy shares simply by going to an online trading account or through their broker or financial institution. So this makes it very, very easy for people to become angel investors and participate in what I think is the first publicly listed angel fund. So we started this one about 5 years ago. We've got roughly 7 investments. We're working our way up to that more than 10, which I feel is so important in an angel fund and angel investing in general. Because we're public, we have a large number of investors. There's no minimum. You can buy any number of shares. In the case of our private company, the minimum is $10,000. Here there is no minimum. And of course there's no hold period. One of the problems with a fund is that, same as with a private company, is you're locked in. You can't immediately get out. Once you've written that check, you're back in the jailhouse and you can't get out unless somebody buys you out or you have some liquidity. So in GreenAngel, we've also got some other initiatives I mentioned here on this slide. We have these 9% notes which we give to investors, and I thought that would be of interest to this audience because those can be used to finance Greentech projects where you need an upfront outlay of capital, which is then serviced by cash flow resulting from that project. So we're offering these 9% notes, and we take that capital and then put it into specific projects. But the bottom line here is that really anyone can be an angel investor in this kind of a fund. We chose the Greentech.
Is that note basically a loan to the fund? Is that like a bond?
Basically, it's like a bond. It's basically a debt instrument, and we pay you 9% on that, and you can hold that in an RRSP account, which gives you tax-free compounding. So it's particularly attractive to investors that have cash in an RRSP that's only generating, you know, your CD returns of, say, 2 or 3%. So that's something we just launched earlier this year.
Thanks.
I just want to mention another initiative, and this is our power. This is actually a two-pronged initiative. We have both the Powerhouse Angel Network and the Powerhouse Angel Fund. The Angel Fund is called Powerhouse Technology Ventures VCC. So as you learned from my previous slide, if you invest in this, again, you have to be, regrettably, an accredited investor, but you do get the 30% tax credits. This is part of a network called the Powerhouse Network, which is supported by the NRC IRAP program. And we started this last year with a view to not only putting money into interesting green technology companies, but really talking about and addressing the people issue. as I mentioned in one of my opening slides, it's not just about the money, it's about the people behind the companies. And the whole idea behind the Powerhouse Angel Network is to really invite people who can invest not only cash but also their time. In fact, inviting people who aren't accredited and who may not have the cash but who do have the time and the experience and who can really roll up their sleeves and help these companies become successful. I want to give you an example here of an interesting, I was asked to mention a few companies, and here's one that has gotten a fair amount of publicity locally and internationally. This is a company called General Fusion, and we got involved with this company. In fact, it's been going for about 10 years now. And this fellow who you see in the photograph on the right, Michel Laberge, the mad scientist, the physicist from UBC, came to us, and he was looking for $400,000 of angel capital to prove that he can produce neutrons, which would in turn be used to generate heat and subsequently electricity. And he needed to demonstrate this with the prototype that you can see him standing beside. And we were able to use the VCC tax credits combined with other government incentives so that we were able to raise the $400,000 for Michel in a matter of a couple of weeks. So here you have a project. I mean, let's face it, fusion energy is risky. It's in the future. It doesn't exist today, so it's very speculative. But we were able to raise the capital for him using all of these wonderful tax incentives we have. And the interesting thing that we said to investors was that if this fails, if you put your money in and the company is shut down, we will actually be able to pay you back your capital from tax credits that are yet to come into the company, most notably the scientific research and experimental development tax credits, which here in British Columbia give companies back up to 68% of any capital that they spend on research and development. This company, since we put the $400,000 in 10 years ago, has raised close to $50 million and is really doing some very phenomenal development work in this area of fusion. And if any of you are interested in this, I would encourage you to take an opportunity to visit this company. It's a very fascinating story and very impressive to see what they've done with their capital. Another company that GreenAngel has invested in is D-Point Technologies, and I mention this one because it's a technology that comes out of Ballard fuel cells. Basically, they've taken the Ballard membranes and have put them into energy recovery ventilators in buildings, so that the buildings are now more than 70% more efficient in terms of energy losses. And this all started with a Ballard technology. This company is doing quite well. It's attracting customers, its sales are increasing, and it's presently doing a 2 to 3 million round from angel investors. This company will be one of the presenting companies at the investor forum that's taking place in Vancouver this coming weekend. Another GreenAngel company is Matza Innovation, and I mention this one as an example of the kinds of companies that GreenAngel in particular likes to work with. So this is a typical case of where a scientist, much like Michel Laberge with his fusion project, in this case it's a scientist who was working with Agriculture Canada, a fellow by the name of Giuseppe Matza, very accomplished in his field, very prolific researcher, published many papers on phytochemical extraction, which basically entails the extraction of good stuff from plants without the use of hazardous and environmentally damaging solvents. And basically he had patents and an idea and an opportunity, but he had no capital and no people. So GreenAngel met him through the New Ventures competition and we liked his story, we liked him, and we thought that this was a good Greentech project for us to get involved with. So we committed to raise a small round of startup money. In this case, it was $300,000. We found him a chief executive officer with business experience, and we put together a board of directors to provide the stewardship and the guidance going forward. To date, that company has now raised, this was about 2 years ago that we got involved, and to date, the company has raised about close to $1 million, and it's just closing on a $500,000 round. Now, this company will also be presenting at the Weekend Investor Forum. And this is the conference that I'm referring to. We have arranged with the organizers of the investor conference, the Cambridge House folks, to have this powerhouse pavilion, which will feature about 25 Greentech companies. What you see here is a photo from the Globe 2014 conference that took place in Vancouver just 2 months ago. We had about 30 companies displaying their technologies. It was very well received. We had lots of investors, lots of customers visit. The whole idea behind it was to showcase what BC is doing in the clean tech sector and at the same time attract investors to these companies. And you're all invited to attend that conference. If you go to the GreenAngel website, for example, there's a link there which will in turn connect you to some information on the conference and a link where you can register free of charge if you do so in advance. So with that, I'll turn it back over to you, Guy, I think, yes, or to Bruce. That's my 2 cents on angel investing and some of the things I'm doing. I'm always looking at new ways to help entrepreneurs access not just the capital that they need to grow their businesses, but also connecting them with the right people that can help them with some of the business issues.
That's excellent, Mike, and your timing is immaculate. We have 20 minutes now for questions, and just to repeat on your GoToWebinar control panel, if you type in your question there, Bruce will sift through them and get to as many as we can. And Bruce, if you can call out the person who's asking the question as well, it gives us a sense of place and person as well. So who do we have lined up?
Okay, here's one from Roy Hales. Have any of your profits made revenue, or sorry, any of your companies made revenue or profits? What percentage are viable organizations now?
Well, in the case of the GreenAngel Fund, DPoint is generating revenue. It's not quite profitable yet, but it's got sales and revenue. In the case of the What If Fund, we've got quite a number of companies. Because we've been at it for 10 years now, we can boast that a number of the companies are generating sizable revenue. Some of them are approaching $50 million a year in sales and are profitable. And of course that takes time. You know, in the case of GreenAngel, these are young companies. Most of them we've been involved with for only 3 to 4 years, and they're still in the pre-revenue or in the early revenue stages.
That's great, thanks.
Here's one from Victoria Cerda, which I'll embellish a bit. What other, you're connected up with Western University, or is it a group of which, what is your connection with universities, and are there other universities leading other funds doing similar kinds of things?
Good question. I use that name because of my association with Simon Fraser University, where I'm director of the Innovation Office. I started that fund 10 years ago with a view to making the capital available to researchers and to students coming out of Simon Fraser, UBC, and the University of Victoria. And I got some help from my colleagues at UVic and UBC to get that fund launched. But not long after we got it going, we said, well, why restrict it to the universities? Why not make it a province-wide fund? And that's what we've done, and the investments in the fund are all over the province. Many of them are from universities, but we're certainly not limiting ourselves to university companies. Elsewhere in Canada, there are a number of universities that are looking at establishing funds, in many cases not similar to us, not just for their own constituents, but also for their respective communities at large. I know Ryerson, for example, in Toronto is doing something along these lines. I've been working with some of my colleagues on the East Coast to help them get some funds launched along these lines. Funds are still a fairly new phenomenon. I would say angel investing has now been around, for 10 to 15 years, but the funds are just a new initiatives, and typically there aren't too many funds that are more than 5 years old. And another thing about funds is they're all run a little differently. They all use different models. But the important thing about the funds is that they are all a way for investors to make the numbers work and to work together as teams to make good investments.
Great. Who else do you have?
Here's one. What would you like to say about crowdsourcing from Kathy?
Yes.
Mm-hmm.
So this is kind of interesting because there's a little secret I'll let you in on. Here in British Columbia especially, and it's not true anywhere else in Canada, it's only in BC, and it's certainly not true in the United States, we've actually had crowdfunding for more than a decade. It's just that it hasn't been called that, and people haven't realized that we have it. And that's something called an offering memorandum. I explained to the audience what an accredited investor was, and that in order to invest in a private company, you had to meet one of the securities exemptions. Well, one of the other exemptions is what's called the offering memorandum, which means that if an entrepreneur prepares something that's kind of like a business plan and makes it available to investors, then the entrepreneur can basically sell shares to anyone in British Columbia in any amount without any limitations. And surprisingly, very, very few companies have used that. One of our GreenAngel companies, a company by the name of Paradigm Environmental Technologies, working with sludge waste processing, has used that and has been very successful. They've raised something in the neighborhood of $10 million using that offering memorandum. Now, the reason crowdfunding is a popular topic these days is because Obama in the U.S. was under pressure to do something for entrepreneurs to make it easier for them to access capital. So he came up with the Jobs Act, which means jumpstart our business startups. And he went to the regulators and said, look, you've got to stop this degree of regulation and lighten up a little bit so that we can open the doors to the general public, people who aren't in that top 1%. And so every regulatory jurisdiction, the U.S. and all of the provinces in Canada, are fiddling around with a new exemption to the rules and regulations called the crowdfunding exemption. And here in British Columbia, there's a proposal put out by the regulator, and the proposal goes something like this. Entrepreneurs can raise up to $150,000, which isn't a lot, from investors up to a maximum of $1,500 per investor. And I guess the rationale behind that is they're thinking, well, okay, we'll let you speculate to the tune of $1,500, but we're not going to let you bet the farm, which I find kind of ironic, but because there isn't such a regulation on gambling. You know, we have the Lotteries Corporation, and they encourage you to go out and gamble, but it's funny that they don't encourage people to gamble on startups and entrepreneurs. I find that really kind of perverse, if you want my frank opinion. But nonetheless, that's what crowdfunding is all about. And I think that here in BC, the offering memorandum that I just described actually trumps the crowdfunding exemption that they're thinking about, because why bother selling peanuts to investors when you can go the full 9 yards with an offering memorandum? Plus, I'm a big believer in the offering memorandum because it does provide investors with some degree of disclosure on the companies. One of the big worries about wholesale crowdfunding is that you're going to get a lot of small investors losing a lot of money on a lot of companies that they know little about, and I think initially there's going to be a lot of money that flows into these companies, but I think investors are going to feel the pain when they realize that there's not much liquidity in those investments, and when they realize that most of these startups, and this is something I didn't mention in my presentation, you know, most startups fail. The failure rates are very, very high. It's 80%, 90%. And if those companies don't fail in the first 5 years, you'll get another 80% to fail in their second 5 years. So it's risky business, which is another reason for angel funds and for diversified investments.
Thank you. Good answer. Bruce.
Here's quite a different topic. Here's one from Catherine Rosoka. Do you have any companies in the energy efficiency business, particularly focusing on electricity saving opportunities?
Yes, one of my favorites is a company called Energy Aware, which was started by two female graduates from the University of British Columbia. We incubated them here at Simon Fraser University, and they're doing quite well. They recently raised some money on another form of crowdfunding. This is where you basically pre-sell your products. They went on Kickstarter, where they offered a home energy monitor and management system. They were looking to raise $100,000. They ended up selling $300,000 worth of the product in a matter of 1 or 2 weeks from going live on Kickstarter. So this company basically monitors your hydro consumption and will tell you not just what you're using minute by minute, but which appliances are the culprits. And so they'll break it down and tell you exactly what's contributing to your consumption so that you can do something about it if you find that your hydro bill is going through the roof. So that's a very exciting young company, and I think they're on to something very big.
Great.
Here's another one that's related from Andrew Zwicker. Do you invest in green energy developers? I presume that means companies building wind farms and such, or is it just technology?
No, we'll also look at developers. I myself was involved in a run-of-river project here in BC. It was a company called Altera, or it's now called Altera. It started as Plutonic Power, and I was one of the co-founders along with Donald McInnes, and we set up Plutonic as one of BC's first run-of-river projects. And what if one of the my first angel fund is an investor in that particular company?
A question from Sam Gurgis. What type of connection to India and Africa that you mentioned that you've been there? What type of investment can you support, especially in renewable energy there? Do you have any ideas?
Well, what we're doing in those countries is I've made some friendships with other angel investors or university colleagues in those countries, and so what we're looking at is, are there any Canadian technologies? For example, let's say the deep point energy recovery membranes that I refer to. Is there an opportunity for those products in the Indian market? And are there some Indian entrepreneurs that can work with deep point in that market? Or vice versa, are there some companies in India or in Kenya, for example, that have products that could be taken to market in Canada, and the United States. So we're looking at building some of those types of connections, because one of the things about the Greentech sector, which makes it quite a bit different, I think, from, let's say, information technology, is that you actually have stuff. You don't have just software and cloud bits and bytes. You actually have nuts and bolts, as you can see in some of the photos that are on your screen now. You actually have physical products, and that means you need local service and support, maintenance, all these kinds of things, and hence Greentech products are actually ideal for these kinds of international linkages and collaborations.
Great, thanks. Bruce, how are we doing for questions?
Here's another one related to overseas. Can foreign investors outside of Canada or outside of BC purchase shares in GreenAngel Energy?
Well, I hope they do. And yes, they can. That was one of the reasons for going public, because as a public company, it's quite easy to buy shares. You don't need our permission. You just basically go online or through your bank or your broker, and you buy the shares. Now, having said that, I want to caution you, and I think it would be unfair of me if I didn't give you this cautionary note. We are a junior company. We are speculative. Our shares are trading for a very small price. We originally started at 20 cents a share. Our most recent trading price was around 6 cents. So, I mean, on one hand, you could look at it as a bargain compared to people who bought shares at 20 cents. But one of the reasons why the value has drifted down, well, there are really two reasons. One is because we have had a couple of failures. Some of the early companies that we've invested in, as expected, have failed. Excuse me. The other reason is that not too many people know about GreenAngel as a fund. And of course, one of the key factors driving the price of public company shares is the number of buyers in the market. And if there aren't many buyers or many investors, the price will eventually dwindle down. And that's what's happened with GreenAngel. So this year, we're doing things like the Powerhouse Pavilion that we did at Globe and that we're doing at the upcoming conference this weekend, all with a view to getting more interest, getting more investors. Because our dream, our vision for GreenAngel is to build it into a large, viable resource that entrepreneurs, especially entrepreneurs in green technologies, can tap into. The other really neat thing that I forgot to mention about a public angel fund is that it's an evergreen fund. It never has to pay out its capital to its investors. In the case of private funds, there's always pressure by those funds to give something back to the investors, hopefully more than they put in. So most private funds have a limited lifetime because eventually they will get returns from their companies and distribute those returns back to their investors. Whereas a public fund like GreenAngel never has to redeem shares to its investors. If investors want to cash in, they simply sell their shares on the public market to other investors, and the fund itself can continue to grow and get larger and larger. And that's my dream for GreenAngel Energy, is to see it become larger and larger over time, so that it's not only a resource to investors, or rather to entrepreneurs, but also a good asset class that investors can participate in and get those Rob Wiltbank angel investor type returns on their capital.
That's great, thanks.
Here's one related to return from Roy Hales. What makes you sure you can give a 9% return on your notes?
Those notes are basically backed by government receivables. So those notes are presently only going into projects where the cash flow is, excuse me, secured by typically by government or quasi-government type credits. So it could be, for example, could be a power purchase agreement. It could be an advance against scientific research and experimental development tax credit refund or something along those lines. But it's basically very, very low risk loans that are made to companies that are well secured so that the risk of default is extremely low.
Here's one from Jonathan Hollander. You mentioned a study, or you showed a study showing angel investors saw a 27% internal rate of return on average. Does that include the tax incentives, or is that purely through the exits?
That doesn't include any allowance for tax breaks. That study was just based on the amount of the investment made by angel investors, not their net amount. It was the amount that they actually invested into companies, not taking into account any type of break they got from any governments in their particular jurisdiction.
Right. Can I throw a question in here, Guy, here before time runs out? When in your community of colleagues who you mix and meet with, when you have discussions around global climate change and government involvement or lack of government involvement and the prospects for a green energy transition, what's the kind of feeling? Are they bullish? Are they bearish? What kind of conversations are they having? What's in their minds? Very nebulous question, I understand.
Yeah, it's interesting. You know, the sort of policy issues don't come up very often. I think with the people that I associate with, you know, they're basically hands-on entrepreneurs who want to do some interesting things, and their attitude is, you know, let's support entrepreneurs in creating companies, and if we can focus on companies that in some way you know, reduce our GHG emissions or improve our energy, you know, make energy use more efficient, or manage energy, or just, you know, reduce some of the energy waste, then in some small way we're contributing in a positive way to that large issue of climate change.
Right. So take an issue of the BC's carbon tax, which clearly tilts the playing field a little bit in favor of the green energy futures. They'd be supportive of a thing like that, would they?
Mm-hmm. Yeah, we did. One of our GreenAngel companies was actually, it's one of the ones that hasn't done so well. They were working in this whole area of carbon credits, creating the credits, trading the credits, working on projects that would you know, would have a positive environmental impact. Yeah. And because the policies never really got implemented at government levels, that company unfortunately fell on hard times. And the good thing about it, though, is that it's reinventing itself, and the entrepreneurs that we backed are getting into completely different Greentech ventures, although even though their original carbon project didn't turn out so well.
Yeah. So Bruce, we're sitting on a last question before we end, or we're come to that time, I think, of finishing, right?
Yes, we're very close.
Yes. So Mike, this has been really useful. It's lifting a corner on a world that most of us don't get to see. We're not in that 1%. A lot of us aren't. And it's fascinating to understand the dynamics, the opportunities, the risks. So thank you so much for doing this for us all. We will have another webinar title yet to be revealed during June. And in the meantime, we'd love it if you are able to become a member of the BCSEA and join us in doing this kind of work. We have a lot of other activities as well as the webinars. And thanks to everyone for participating in British Columbia and around the world. Thanks to you, Mike and Bruce. And we'll
You're
talk to you
welcome. My
soon.
pleasure.
My pleasure. Thanks, then.